Well, we just got earnings, and here's a quick rundown of everything that you need to know before we get into all the details of the earnings calls. Here you go. First of all, watch Reddit. Reddit, this thing just came in with a crazy surprise. I mean, it is up 17% right now in after hours. This is going to skyrocket this to all-time highs. We've never been at this level before for Reddit. Reddit comes in with average revenue per user of $5.88 per quarter, which means if you use Reddit every quarter, you are somehow earning this company $5.88. And they've got like 48.2 million daily active users in the United States. They've got 97.2 million active users worldwide. And this company was not expected to be profitable until next year. So they were expected to have a $13.8 million loss. They actually came in with a gain here of $29.9 million, which is actually really, really incredible. If you consider the net income they're expected to have next year of about $226 million, that's net income, bottom line. They're expected to be at about $1 a share for EPS. It still puts their valuation pretty dang rich up there because, you're looking at now basically a $95 stock selling for a 95 PE ratio, but their revenue could also double over the next, it's expected to go up 86% in 26, another 90% in 2027, and 23% in 2028. So maybe it's a growth story. Might be a little early to tell, though, how their actual earnings look and how sustainable that could be. Because sometimes when they take adjusted EPS and they're like, oh yeah, all of a sudden we're profitable, sometimes there could be kind of gamesmanships going on in there. I'm not trying to sound jaded on Reddit, but I mean, hey, we'll just take a quick look at their financials. Well, their revenue exploded. So, I mean, they're pulling this cat, bunny out of a hat or whatever you want to call it somehow. I mean, look at the 9 months ended. You went from $554 million to $872 million. You went from the quarter ended from 207 to 348. This is a great boost of revenue. Now, you did boost your sales and marketing, but I mean, you almost doubled your revenue, and your sales and marketing are up like 50%. So you have this positive operating leverage. You are spending more money on research and development, but I mean, you're still making money. You're bringing money to the bottom line now. So a lot of people pretty excited about what's going on over at Reddit. They do have, at the moment, it looks like you've got free cash flow, which is great. They did sell some crypto. How dare they sell? They paper-handed some crypto. So it looks like they sold about, what do we got here? This looks like thousands, million, about $7 million worth of crypto. And if I jump into their balance sheet for a moment, I see assets of about $2 billion, and I see total liabilities of $194 million. This company is like cash rich. So honestly, good job, Reddit. This is really impressive. I don't use the product. I don't know much about it, but you know what? Good for them. Then you got AMD, and Lisa Su says that there's insatiable demand for more compute. They matched on earnings per share on an adjusted basis. However, their Q4 forecast was down by just 66 basis points. Just to reiterate what that means for a moment, that means they were down 0.66% on the forecast, and then their stock fell 4%, and then their forecast margin fell by 20 basis points, and then you started getting the doomer headlines. AMD forecast falls short, suggesting a slower pace of AI growth, and now the stock's down. I mean, I'm watching it right here. It's down, 7%. It's only taking NVIDIA down like 0.25% with it, so it's pretty nominal for NVIDIA, but you get a little bit of a bleed here. In fairness, the stock was up 4% today, and it's kind of been rallying going into this, so maybe it's not that big of a deal. And quite frankly, they're still growing pretty well, because when you actually look at their earnings statement, which is right here, you can see that they're expecting to see year-over-year growth of 22% and 10% sequential growth, which means from last quarter to this quarter, still 10%. That's really, really good. So, I don't actually see this as bad. I actually think this is just good. The problem is when you get markets that are at sort of all-time highs and they have lofty expectations, you kind of think you just keep growing forever. But then the law of large numbers catch up and it's sort of like reality sets in. And you're like, oh yeah, that's right. We can't really do that forever. Now, one company that I think really crushed it here that I think should be up way higher than this. So I have no exposure to the stock right now. I wish I did after this. It's up 4.2%, but I don't. And it's Google. So Google beat on cloud by 5.1%. YouTube basically matched expectations, but their earnings per share were up 15.2%. Ad revenue beat by about 50 basis points, which is really low. I think the reason the stock isn't up more, though, is because ad revenue is the vast majority of this business. Just a fraction of the business is cloud. We'll look at the statement in just a moment. And a lot of people are saying they don't give forecasts. I don't have a forecast or anything from them, so, who knows. But at least for the quarter ended in September, they killed it. I mean, just look at the statement for a moment. Google services up 13%, cloud up 35%, total operating income up 34%. And I'm a Google Cloud customer, and frankly, they keep introducing new AI products, and they keep wanting to charge more and more for them for enterprise AI products. And I feel like I keep giving them more and more money. So maybe I should have been my own indicator. Sometimes I feel like I should just listen to myself. But anyway, it's worth noting that 12.8% of Google revenue comes from cloud. Most of their revenue comes from like YouTube and network and Google search. And I will say the AI built directly into Google search is pretty amazing. It's a very, very smart integration of artificial intelligence. I love it. I think it's very useful, and I'm a big fan. So shout out to Google here. I think they did a fantastic job. I read through a little bit of their statement here, and I think they have very, very reasonable operating leverage increases here. Their margins are moving up. They've got over $16 billion of free cash flow. And this is just 17.6 billion. This is just a fantastic company. So big fan here. Google just tried and true. I mean, it feels like a great company. So great job, Google. I don't really have anything bad to say here. We'll see what happens in the earnings. Next one to mention is, since I haven't yet, HouseHack has a really cool offering in case you want to invest in HouseHack. And then we're going to talk Snapchat and Chipotle. We've got a pretty awesome offer, so if you want to learn about that, go over to househack.com. You get all the upside in the stock, once we go public or get a valuation in the future. But in the meantime, you lock in a 5% distribution on an annual basis that we pay out to you monthly. Learn about that over at househack.com. There's a whole video and presentation, disclosures, and a PPM, so make sure to read all that stuff. Okay, so Snapchat came in with an alert that there might be slower holiday advertising sales, which is interesting because it's kind of also what UPS warned, that there might be sort of a tempered outlook for this holiday season. The stock still went up about 4%, and their Q3 basically matched expectations, but they're also doing a $500 million buyback, so that could be what you're getting there. Then you had Chipotle. So Chipotle missed. They did authorize a $900 million buyback, but they missed about 1.6% on their revenue forecast, and they missed by about 7.9% on new stores, and they missed on comp sales by about 6%. All of those were sort of enough to maybe tell the market, like, hey, the Chipotle valuation's a little on the rich side. Maybe we don't want to be paying this much money for this sort of stock. And so, I mean, it's still, it closed at like $60 today. It's only down 5%, like big deal. It's still, pretty remarkable in terms of where its pricing is. But I mean, consider this is a company that's selling for a 55 times, multiple. And you've got a projected growth of maybe 18% over the next 4 years on average. So, when you divide that out, that's 55 divided by 18. You're trading for a 3 peg for a company that's giving you rice and beans. It's a little rich, but their margins are great. Operating margin at 16.9% beat the 15.7% expectation. I gotta give it to us. Pretty damn good. First Solar, miss. They missed on revenue. They missed on operating income by 11%. They are down about 6.9% in after hours. They are reducing their CapEx and their operating income forecast. Unfortunately, there's probably just a lot of uncertainty around solar right now in general, because like markets are basically pricing in a Trump, which is, you know, he's obviously a little bit more anti, how dare you say, you know, clean energy. But I mean, if you heard him on if you want me to do a summary on the Joe Rogan pod, I'll do the summary on the Joe Rogan pod. But, you know, Trump's anti-windmills and EV mandate and all this. I think we all kind of already know that. But anyway, so, you know, take a look over here. As we approach the end of 2024, we remain pleased with the progress across our business, navigating against a backdrop of industry volatility and political uncertainty. There it is. Alberto here says, market is screaming melt up. All right. So then you've got over here, with a continued focus on balancing growth, profitability, and liquidity, we expect our disciplined long-term approach will get us through the U.S. election. So they're basically just going to blame the election. The problem is, if these sort of like negative numbers keep coming in, I mean, look at this downside. The 3 months ending June 30th, they had over $1 billion in revenue, and now they're at under 900 million. You know, that's a hit. Their gross profit's down like 10%. That's a hit. Their SG&A is the same. Their R&D is the same. Production startup costs down a little bit, but then they have a litigation. Well, and then they're comping against a litigation loss, so that's a benefit for them, since they don't have that here. But, you know, when we look at net income, their net income's still down like 10 to 15-ish% or whatever. So you are getting slapped in the face a little bit. They're blaming the election, but once the election comes and goes, it's going to be a little bit of a problem. So we'll see what happens here. Some people in the comments are asking, yeah, what's going to happen with Tesla? You know, I think that is also a big irony, is that, like, you know, Donald Trump is so blunt about, like, I'm going to get rid of the EV mandate. And Elon is such a, you know, proponent of Elon, or of Donald Trump. But then I think the counter argument here is that, you know, Elon thinks Tesla will be the EV maker to survive, and that it'll really just hurt the Fords and the GMs and the other ones. Okay. Visa is laying off about 1,400 employees by the end of the year, 4.6% of their staff gone. This is not good, especially with that weaker JOLTS report. It just sort of reiterates again that one of the ways companies are bumping profits is just by firing people. That is unfortunate, because eventually that is going to catch up to the economy, especially in an environment where yields are rising. This is a slow growth economy. You know, the economy's slowing. And everybody hopes we're going to have that soft landing. But, you know, as it's slowing, they're actually adding more weight to our back with these with higher yields in markets. It's not exactly ideal. With that said, though, Visa is still forecasting an increase of high single digits to low double-digit revenue growth for this holiday season coming up. And then Cheesecake actually beat on comp sales 1.6% versus the expectation of 1.03% expected. It's pretty good. And Caesars matched expectations, but they were still down like 5%. Cheesecake's actually up like 5% though on this, by the way. They're pretty enthused. And I think that's just because they've gone nowhere over the last 3 years, so is what it is, I guess. But some things to watch for tomorrow, and if you want, we can do, you know, sort of another summary. I don't know if you find these useful or whatever, but if you do, you know, let me know. But we're obviously going to get some more earnings tomorrow. We're going to get Wingstop, Caterpillar, Eli Lilly in the morning. We'll get the ADP report, GDP annualized. We'll get the advanced report, price index for GDP. Wednesday PM, we'll get Microsoft, Meta, Coinbase, Robinhood, Carvana, Etsy, Roku, Starbucks, Dash, DoorDash, Lemonade, and eBay. And then Thursday, we'll get Peloton, MasterCard, Uber, Norwegian, the employment cost index report. And the PM, we'll get Amazon, Apple, Intel. Friday morning, we'll get Wayfair, Simon Property Group, Chevron, and the jobs report, which is expected to come in poopy doopy. So we'll see what happens. But so far, this is a 7% drop on AMD. I'm kind of curious to see what this is going to end up doing to, you know, markets tomorrow. I'm looking at Tesla down about 43 bips. I got the Qs almost flat, although they're pretty much at all-time highs. 500 on the Qs is really impressive. BTC dropped a bit after some of these AMD earnings, but it looks like you're already kind of on its way back to sort of recovery here. So we shall see. Anyway, that's all I got for us. If you got questions about House Hack, email us at ir@househack.com. Otherwise, thanks so much for being here, and we'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.